Hey guys, hope you are doing well and welcome to another new video. And this is Arman Niloy. In our previous video, I talking about how to refinance your mortgage. The previous video I am talking about how to get a personal loans, the ultimate guide, and this today's video I talking about how to refinance your mortgage. So I hope you guys enjoy the video. If you guys enjoy the video but you do not subscribe our channel yet, please subscribe your YouTube channels, get more video like this. So guys, let's start this video. Today I know we know that mortgage refinance and what is and how does it work. First, then we know what does it mean to refinance a house. On this video, the reference a mortgage okay, now when you reference the mortgage on your house, you are essentially trading in your current mortgage for a newer one, and often with a new principal and a different interest rates. Your lender then uses the newer mortgage to pay off the old one, so you are left with just one loan and one monthly payment. There are a few reasons people refinance their homes. You can use a cash out refinance to make use of your home equity, or a rate and term refinance to get a better interest rates and or lower monthly payment. Then we know how does refinance a home work. The refinance process is often less complicated than the home buying process, although it includes many of the same steps. It can be hard to predict how long your refinance will take, but the typically timeline is 30 to 45 days. And the next we know how it's applying. The first step is to review the types of refinance to find the options that works best for you. When you apply to refinance, your lender asks for the same information you gave them or another lender when you bought the home. They look at your income, assets, debits, and credit score to determine whether you meet the requirements to refinance and can pay back the loan. Some of the documents you lender might need include your the number of one to most recent pay stubs, the most recent W2S, and the third the two most recent bank statements. Okay, the next one, looking in your interest rates. After you get approved, you may be given the options to lock your interest rate so it doesn't change before the loan closes. Rate locks last anywhere from 15 to 16 days. The rate lock period depends on a few factors like your locations, loan type, and lender. You may also get a better rate by opting to lock for a shorter period of time because the lender doesn't have a hedge against the market for as long. Be warned though, if your loan doesn't close before the lock period ends, you may be required to extend the rate lock, which may cost money. And the next we know underwriting. Once you submitted your applications, your lender begins the underwriting process. During underwriting your mortgage, lender verifies your financial information and makes sure that everything you have submitted is accurate. Your lender will verify the details of the property, like when you bought your home. This step includes an appraisal to determine the home value. The refinance appraisal is a crucial part of the process because it determines what options are available to you. The next we see home appraisal. Just like when you bought your home, you must get an appraisal before your refinance. Your lenders orders the appraisal. The appraisers visits your property, and you have received an estimate for home's value. The prepare for the appraisals, you will want to make sure your home looks its best. Tidy up and complete any minor repairs to leave a good impression. It also a good idea to put together a list in upgrades you have made to the home since you have owned it. Okay. If the home's value is equal to or higher than the loan's amount you want to refinance, it means that the underwriting is complete. Complete. The next is choosing on your new loan. The choosing on your new loan, and the next two for the reasons, and the next two know for reasons to refinance your mortgage. The number of one, change your loan term. Many people refinance to shorten their loan terms to save on interest. For example, say you started with a 30 years loan, but you cannot afford a higher mortgage payment. The number of two, lower your interest rate. Interest rates are always changing. If rates are better now than when you got your loan, refinance might make sense for you. Lowering your interest rates can lower your monthly payments, and you will pay less interest over the life of your loan. And the number of three, change your loan types. There are many reasons a different type of loans may benefit you. Perhaps you originally got an adjustable rate mortgage, ARM. It's ARM to save to interest, but you would like to refinance your ARM to a fixed rate mortgage while rates are low. And maybe your finally you have though your home equality to refinance your FHA loan to a conventional loans and stop paying to private mortgage insurance. And the number of four, cash outs your equality. With a cash out refinance, you borrow more than you on your home and pocket the difference as cash. If your home's value has increased, you may have enough utility to take cash out of home improvement, debit consolidations or other expenses. Using cash from your home allows you to borrow money at a much lower interest rates than other loan types. A cash out refinance can have tax implications though. Guys, this video I trying to talking how to refinance your mortgage. So this guys video is helpful to you. Please like this video and subscribe to our YouTube channel.